Hello, Mike Petry, M&M Mortgage. Just shooting out my monthly mortgage update here, and got a couple things that I want to talk about today. First and foremost, rates. I talk about this each month, obviously, but what is going on with the mortgage rates? Obviously, as I think everybody knows, the mortgage rates have gone up quite a bit here in 2022. Here's the 10-year graph right here. You can see that. It is at an all-time high right now for the last 10 years, still shade over 2013, 2014, and 2018. So what does that mean to you? I think a lot of people are thinking, hey, let's just wait for the rates to go down and then maybe I'll buy a house at that point. I would very much caution upon that thinking. I mean, obviously buying last year or the year before would have been outstanding with the rates at all-time lows. But I think in the coming years, everything that I'm reading is that mortgage rates are probably going to continue to rise with inflationary pressures at the end of the day. Until that gets figured out, I don't think mortgage rates are going down anytime soon. The other thing that I wanted to hit on is the 3/4 of a percentage point Fed funds increase did not increase the mortgage rates. I really want to stress that the day when that was announced, the mortgage rates actually went down. The Fed funds rate is actually the rate that is going to affect credit cards, car loans, any type of short-term lending. That's what the Fed funds rate, is for, not mortgage rates. It was more the market reaction to the Federal Reserve doing that is going to dictate rates up or down. And actually the reaction to what they did made the rates go down a little bit. Now they're still very high no matter what relative to last year, but in relation to the 75 bips or the 3/4 of a point increase, the mortgage rates actually went down that day. So I think in the coming months, coming years, mortgage rates probably not going down. Nothing ever goes linear, though. If you're willing to wait 5, 10 years, you might win on the rates. But if you're doing it in the short term, now's the time. Rents are increasing nationwide. I think they're up 14% this year and last. And remember, when you're paying rents, there's no, the rates are higher, so there's less money going towards your principal on that type of a mortgage payment. But in the rent world, it's going to somebody else's mortgage. It ain't going to yours at all. So rents are getting higher and higher, and it doesn't go to where you want it at the end of the day. And then the last thing is just inventory numbers. We're getting a little bit of a shift, not even a little bit of a shift, but a pretty large shift, in just the supply and demand on houses. I guess I'll just say that this year, since February of 2022, inventory levels have been unbelievably low. As you saw in February, decade-long low of 4,221 homes on the market at the end of January. March is down 19% from 2021, and it was at 4,361. April down 12.1%, but from the prior year, 5,004. May 5,758, down 9.2% from the prior year. And then in June, we've got a shift, 6,766, 5.3% up from May of 2021. I think the rates going up, obviously, is not a good thing on the payment side, but it is, I think it has suppressed a little, people on the buying side. So there's less people out there shopping for homes. So getting a lot more clients under contract right now, and there's a lot less 30 offers on a home within 1 hour type of scenarios. And sometimes clients are getting the property at the market, right now versus having to go 20, 30, 40, $50,000 higher. So if you're still in the market, now is a great time. You might be able to get a property under contract, even if you've been looking for the last 6, 9 months, year, whatever it may be. So if you have any questions, reach out to anyone at M&M Mortgage. We are here to help you, and continued good luck on the house shopping. Have a great day.